Good morning. At the very outset, wish all of you a very, very happy Deepawali. Welcome to pre-market commentary on 31st October 2024. My name is Vijay, and here we discuss what happened yesterday and what is likely to happen in the coming days. Today, I am concentrating more on what is the economy going to do and where we are as far as the markets are concerned and what who is responsible for where we are. So anyway, let's get into it. So we have done fantastically well in the last 10 years. We were a fragile five, and now we have a global. Now we become a global powerhouse with global interest in India, India's economy, India's markets. However, we are now seeing that India's economy is slowing down. And is this a cause to worry? Because what was expected in 2024 was much better than 2023, but things are not working that way. And I think this is what I would say it's an artificial slowing down. There is something called natural slowing down when things don't get okay because of some, I would say, policies which are not good for the government or from the government or the RBI. But here it is a case where the government and the RBI are willingly trying to slow down the economy. So while the government may say we are the third largest economy, from fourth we're going to third largest in the next few years, but sorry to say, their way of handling the finances is left a lot to be desired. I think Reserve Bank of India also needs to do a lot of cleaning of their minds, the cobwebs, which is generally Deepawali is a time when we clean the cobwebs and we look forward to a new beginning. And today is a good day to do that. Yet, with all this, ICRA talks of economy picking up in H2 of 25, financial 25. There is very good reason for that, and the reason is here. First, fiscal deficit data. The April-September fiscal deficit is at 4.74 versus 7.02. So what has happened is the fiscal deficit has been crushed like anything. Now it's one thing very good at macroeconomic level that you have crushed it, and but what is the and you are saying that it's only 30% of the target, which means you got a lot more room, which is both a good and a bad sign. Now you have crushed it. You've got a good you've got a good headroom for you to now spend. The finance minister asked recently as to what ails our economy, why there is no FDI. This is the reason. When the government is the biggest spender. If the government decides that we are not going to spend, if you look at it, this April-September total expenditure is lower than last year, but the fiscal deficit is significantly lower than last year. Receipts are higher, 14.17 lakh crore last year. This time it has gone to 16.37, nearly about 20-25% higher. Capital expenditure, see the capital expenditure, 4.15 lakh crores this year, this 6 months of this financial year versus 4.9 lakh. And then gross tax revenue, they have sucked out the tax of people at 18.13 lakh crores versus 16.19. With so much of money coming in, and if you're not going to spend it, then who is responsible for it? It is not the common people, because the common people are happily giving taxes, or let's say reluctantly giving taxes, but the government is not willing to spend, and government is the biggest spender. However, there is some hope. Core industries data has improved a little bit over in September over August. August was minus, so September is a little bit better. So there is hope. So the government has got all the levers, so they can do what they want to do. But whether they will do it, and hopefully they'll do it, whether they'll do it is a question. Hopefully they'll do it is what my expectation. So let's come back to what's markets today. Yesterday market gave a glimmer of hope, but it got sold heavily during the day. So you had basically Cipla and Shriram Finance, which brought down the index. There was, let's say, fight between Reliance, HDFC Bank, Bank Nifty, total kind of confusion. Yesterday was also the monthly settlement of Bank Nifty. So normally in a month when the indices are down through the month, on the settlement day, generally the markets do come down. So yesterday was Bank Nifty closure of the monthly settlement, and it came down. It's not a surprise. But mid cap and small cap did very well because quite a bit of results are very good. But not everything is hunky dory. So therefore, there was mixed, but still, at the end of the day, we had the advances out trumping the declines by significant margin. So Nifty Metals and Realty did not do too well. We had Nifty Bank, which was gaining quite well on Wednesday, sorry, on Tuesday, did not do so well yesterday. So 1,000 points went up on Tuesday, but on 500 points it gave away on Wednesday. Basically, it was ICICI Bank, which was generally the strong bank, which did not do too well. And then Pharma also declined. Dr. Reddy, for instance, Cipla, Torrent Pharma, everything really was in a mess. Nifty IT also declined. Infosys led the decline, and HCL Tech also was a part of the decline. The PSUs also, PSU banks also did not do too well by the close. At the beginning, they were trying to really regain their mojo, but that did not help. And then Nifty Energy, led by ONGC and NTPC, also contributed to the decline. Now, yesterday we were a little hopeful because the selling by FIs had dramatically come down. The net selling I'm talking about, but yesterday they came back with a bang and sold about 4,600 crores, much more than DIs at 4,500 crores. So net, the FIs and DIs combined together was it was slightly on the negative side. Dow Jones, say global markets, European markets did not do too well because it was led more, I would say, from England, which they raised the capital gains tax, and so the FTSE came down quite significantly. But DAX all the more because now the recessionary conditions have been set in, and I think Europe is going to go under recession. Clear signs, and so I don't know how much ECB will help in easing the situation, but a recession is very clear as far as Europe is concerned. Same thing with UK. Now, Dow Jones and Nasdaq were very volatile, and finally they closed the day with in the negative. Commodities, Brent picked up a little bit from 71 and odd to 72 and odd. WTI was flat. Gold hit an all-time high and it is now trading slightly off the all-time high. Silver is still not hit yet. The recent highs, it is there at around 33.76. So today, what is there to watch? This is a weekly and monthly expiry for Nifty. So this is the last trading. For the expiries, monthly expiry for this month. And also tomorrow we begin new Samvat, and that hopefully will bring us more joy. The last 1 month has been terrible, terrible even for people who are holding good stocks. Today, globally, US PCE is very important. So I think people will look at US PCE, which is Fed watches it very carefully. Then you have initial jobless claims, and in Q2 earnings, not many are there. And corporate action, there are some corporate action not important. Now here I want to point out what is happening and where there is hope for Indian macros. L&T reported extremely good results. Looking at the size, revenue was up by 20%, profit after tax about 5%. EBITDA, which is important, was up by 13%, though margins were compressed. But then look at the other, the consumer part of it. That was the macro part. Now look at the micro part. TTK Prestige reported a revenue, flat revenue, profit after tax came down significantly, EBITDA came down significantly, margins were crushed. So this is where we are. Macros are doing okay, micros are not doing too good. And if the government doesn't take care and just doesn't only focus on money, then I think the second half will be very good. I'm hoping that government looks at it, RBI looks at it and not put their head in the sand as they're doing now, and then ease some things and make the economy accelerate. They have all the levers. It is not that, they don't have the money. They have enough money to spare. They have not gone ahead with their capital expenditure, as I indicated. So here's wishing all of you a happy Deepawali again, and hope this year will be better than last year. Thank you.